the smartest, wealthiest people I know got rich and stayed rich with a simple strategy. You create or you buy assets that are high quality, pristine assets. You hold them forever. And when you need cash to live, you finance them, you borrow against them. Like I buy a football team and I hold it forever, and I borrow, and I have a good banking relationship with a bank, and they loan me money at 3% or 2% interest. I buy a city block in New York City. I hold it 100 years. And then if the Fed prints 10% more money or 5% more money, the building goes up 5% in value if it's truly desirable. If you have assets that are scarce, desirable, and unimpaired, they're not impaired. I use that criteria, right? Because like for 100 years, it was New York City real estate, and maybe New York's not the greatest bet this year. But football franchises, city blocks, if I had an unimpaired, Jeff Bezos held Amazon stock, Mark Zuckerberg held Facebook stock. So buy Bitcoin. Am I going to sell it? No. I'm never going to sell it. I'm never going to, here's two things I don't want. I never want a capital gain tax, and I never want an income tax, right? Okay.
Of course.
So what's the problem? If I buy an asset and then I'm trading on it and generating yield, I could generate 30% yield, but then I owe 15%, I owe tax on it, right? So if I had $100 million and I trade it, I'm taking a lot of risk. I generate $30 million in yield. I pay $15 million in tax. I have $15 million after tax, and I'm trading it, and I've got all this execution risk. Well, if it goes up 20% a year, every year, if I need money, I set up a relationship with a bank. And there are companies, some of the new emerging crypto exchanges will give you a loan. NYDIG will give you a loan. Genesis will give you a loan. Eventually, you'll see loans coming from lots of banks, and the entire Bitcoin banking sector will develop. So take your $100 million, borrow $10 million, pay. Right now it'd be 5% interest. It wouldn't be 50 basis points because the sector isn't as competitive as in stocks. If I had $100 million of Apple stock, I could borrow at LIBOR plus 50 basis points, right? I could borrow $10 million and pay less than 1% interest on it. So right. I would just, and if I told you the stock was going to go up 10% a year, you would just hold it forever.
Yep.
So why do I sell an asset? I sell it because it's impaired. If you have a company, it's impaired by a bad CEO. It's impaired by a bad product release. It's impaired because a regulator makes it illegal. If I have $100 million of land in California, why can't I do that? Well, I probably can, except for the fact I might get real estate taxed to death. The governor of California might impair it by passing a zoning law on it, right? If I have land and land gets taxed and it gets impaired, stocks have execution risk. On the other hand, Bitcoin, it doesn't have the property tax risk. It doesn't have the execution risk. There's no new product. It just exists to exist. So yeah. The strategy is simple. You buy it and you hold it for 100 years. If you bought $1 million on Coinbase and then you simply transferred it to custody or to your own wallet, there's no taxable event when you move the Bitcoin around in kind. The only taxable event is if you transfer it to another person. So if you sell it, that's taxable. If I buy $1 million that goes up to be worth 10 million and you sell it, then you owe capital gains on 9 million. If you give it to your daughter, or you give it to someone, you've got gift tax restrictions just like any other property. If you buy $1 million of Bitcoin and you hold it and it becomes worth 100 million, you could sell it and you'd pay 30 million or 40 million in capital gains tax, have 60 million afterwards. But that'd be stupid because you would be better off to borrow $50 million against the 100 million or 20 million against it. If you borrow $20 million against $100 million in Bitcoin, pick any number, borrow 200,000 against $1 million in Bitcoin, your debt to equity ratio is 20%. Your expenses can go up by 20% a year, every year forever, as long as Bitcoin goes up faster than 20% a year on average. Yeah. your debt to equity ratio falls. And you, in essence, what you're doing is you're doubling your money every year while your debt to equity ratio falls. You never incur capital gains tax, short or long term. You never incur an income tax. You build up liabilities, and when you die, you're going to have borrowed $10 million against 50 million in assets or whatever the number is. And then you've got your estate tax issue you got to work through, and that's a different issue. But as an individual, the only reason, like, why would I ever sell the Patriots if I own the football team? Like, here's when I sell it. I sell it when I think that no one wants to watch football anymore. But if I thought people were going to appreciate that thing for 1,000 years, I would never sell it. So there's risk in art. There's risk in every other asset. There's risk in New York City. People can leave the city. But Bitcoin is like, you're buying a block in cyberspace, 21 million blocks. There's no reason why it can't last for 1,000 years. Everybody wants to live there. There's no reason in theory why it should ever become impaired. Therefore, it's the longest duration asset, and there's no reason in theory why you should ever sell it. You should just get a good banking relationship to borrow against it, and that solves your tax issues.